This video, I would like to highlight how to invest in stocks during economic expansion. So, investing in stocks during an economic expansion can be a lucrative opportunity, as the overall growth in the economy often translates into higher corporate profits and rising stock prices. So, here is how to approach investing in stocks during period of economic expansion. Number one is focus on growth stocks. Focus on stocks that are showing above normal level of growth. Stocks with higher earning potentials. So look for companies that are expected to experience a significant growth in both revenue and profit. These growth stocks often perform well, during an economy experiencing expansion. Not only that, you also consider innovation and technology. Technology and innovation are driven companies are bound to do very well, to perform very well during periods of economic expansion. So we invest in those companies with significant level of innovation and uh, technological breakthrough. Number two is diversify across sectors. You diversify across sectors. So in this case, you consider economic cycles. So different sectors perform differently during various economic uh, during different phases of economic expansion. So consider diversifying your investment across sectors such as technology, consumer discretionary, financials, and industrials to capture, broad-based growth. You also talk about, sector strengths. In this case, you focus on sectors um, that are particularly, strong during economic expansion, such as consumer goods, real estate, as well as industrials. Number three is invest in blue chip stocks. You invest in blue chip stocks. These stocks actually display reliability as well as stability. So blue chip stocks, which are shares of large, well-established, famous companies with history of stable performance. You should be investing in those companies. They are financially strong, and they have very strong financial positions. So equally consider dividend growth. Invest in companies that have that provides growth in dividend payouts every year in, year out. You invest in those companies. And not only that, number four, you also consider small cap stocks because of their growth opportunities. You discover that small cap stocks can offer substantial growth opportunities, and as smaller companies tend to experience faster growth rate compared to larger companies, larger, more established firms. The larger ones are not as nimble as the smaller companies when it comes to growth rates. So you also consider higher risk. While small cap stocks can offer higher returns, they also come with increased level of risk and volatility. So there should be a balance when it comes to investing in this kind of stocks. You tend to balance your exposure to these stocks with other, large cap stocks. Number five is utilize growth funds and ETFs. Utilize, these funds that are focused on growth stocks as well as exchange traded funds. So mutual funds and ETFs. Consider investing in mutual funds or ETFs that focus on growth stocks or specific sectors during economic expansion. So you diversify your exposure. It's expected that you don't over concentrate. You diversify your exposure. So you find funds that provides a diversified kind of holdings, which reduce individual stock risk and benefit from the overall market growth, overall economic growth. Number 6 is monitor economic indicators. So you consider key metrics like GDP growth, unemployment rate, as well as consumer confidence. You monitor all those factors to gauge the overall strength of the expansion in the economy and adjust your investment accordingly. You also consider interest rates. So in this case, you watch central bank policies as it relates to interest rates, because a rising interest rate might impact growth stocks and sectors differently. Number 7, you look for emerging markets. Look for emerging markets. In this case, you consider global growth, global investing. So emerging markets can offer significant growth opportunities during global economic expansions. So invest in international stocks or funds that have holdings outside your geographical boundaries. So you also consider diversification. In this case, emerging markets provide diversification benefits and access to growth outside your home country. Number 8 is take advantage of real estate investment trust. Take advantage of rates. In this case, you are exposed to the property markets. So rate can be a good investment during economic expansion as they offer benefits from increase property value and higher rental income. You also consider income growth. So rates or real estate investment trusts, provide both capital appreciation as well as income growth. So your capital is doing very well, as well as the additional growth in your income. Number 10 is maintain a long-term perspective. Maintain a long-term perspective. So in this case, you consider sustainable growth. Focus on long-term growth and making investment decisions based solely on a long-term perspective. Don't consider short-term market noise. Forget about those ones and have that long-term investment horizon. And you must regularly review your portfolio, periodically review and adjust your portfolio in line with economic realities. And there's the need for you to rebalance your portfolio regularly. Number 11 is stay informed and adapt. Make sure that you are current as regards to market trends. And whenever there's need for you to adapt, you adapt, accordingly. So keep up with market trends, industry news, and company performance to make informed investment decisions. It's very important. And then stay flexible. Apply flexibility. Be prepared to adjust, your strategy as economic condition changes. And so ensuring your investment continues to align with your long-term growth as well as with your risk tolerance. So please subscribe to this channel if you've not done that, and give this video a thumbs up. So investing in stocks during economic expansion involve focus on growth stocks, diversify across sectors and consider blue chip stocks. Utilize funds and ETFs that are focused on growth related sectors. You should also explore emerging markets, real estate investment trust, and inflation protected investment can also be beneficial in this time. So maintain a long-term perspective, stay informed, and adjust our strategy to be able to take advantage of economic conditions you find yourself.